Hey everyone, Coach Investor back to another video for today. So let's talk about the issues that Alphabet is facing in Europe, not only with the release of their AI Bard, but also with maybe more fines. We've had reports came out that say that maybe Europe will hit Alphabet with another monster fine worth billions of euros. We also had an accusation out of Europe talking about Google's advertising model and how that is hurting the competition. Alphabet already answered to that, so we're going to talk about all of that. But I do find it funny that they always manage to, I call it the US tax for EU. They always tend to find American companies because of antitrust, because of data leaks, etc., etc. But somehow Chinese companies always get away. It is very peculiar. Now, if you're not aware of what I'm talking about, the European Commission released this on Tuesday, so antitrust. Commission sent statement of objections to Google over abusive practices in online advertising technology. The European Commission has informed Google of its preliminary view that the company breached EU antitrust rules by distorting competition in the advertising technology industry, or AdTech. The Commission takes issue with Google favoring its own online display advertising technology services to the detriment of competing providers of advertising technology services, advertisers, and online publishers. They continue by saying here that the Commission preliminary finds that in this particular case, a behavioral remedy is likely to be ineffective to prevent the risk that Google continues such self-preferencing conduct or engages in new ones. And here's the big hit. The Commission's preliminary view is therefore that only the mandatory divestment by Google of part of its services would address its competition concerns. Now, for those that don't know, Alphabet was not always Alphabet. Before, it was just Google. But since Google was entering in different markets to prevent accusations of anti-competitiveness, etc., etc., they created Alphabet, and so Alphabet could have different subsidiaries that operate in different markets and so have less issues with antitrust. Well, of course, that didn't prevent the EU and others to hit them with fines. But we already have a comment from Google. So this is an answer by Dan Taylor, the Vice President of Global Ads. So today's European Commission announcement about our advertising technology. Our advertising technology tools help websites and apps make money and fund high quality content online. Today's statement of objections from the European Commission sets out claims that are not new and relate to a narrow part of our advertising business. It fails to recognize how advanced advertising technology helps merchants reach customers and grow their businesses, while lowering costs and expanding choices for customers. They also say here that they compete with hundreds of companies in this space, including household names like Amazon, Microsoft, and Meta, as well as specialized advertising technology companies like Criteo, The Trade Desk, and many others. Even media companies and retailers now offer competing advertising technologies. It's true, many more companies today are offering advertising technologies. I mean, the rise of The Trade Desk is one big example of that. And of course, we have seen what Amazon has been doing lately with their advertising business. Now, this news came days later after we had this Bloomberg report here that Google's ad tech money machine sparks EU antitrust charges. The US tech giant has already faced more than 8 billion euros in fines, and the EU's antitrust is targeting Google's biggest moneymaker, which is the advertising side of the business. And so right now we don't know what exactly is going to happen. The report also said that the fine or the announcement of the fine could already been announced on Wednesday, which at the moment of filming this video is not the case. It's just the report that came out and already Google's answer as well. So it remains to be seen what happens there. Usually the fines can go up to 10% of the sales from that specific company, but they rarely reach that amount because that would be a huge amount. But then again, remains to be seen what happens. Usually you go to court, you negotiate, and then you pay a smaller fine. But in this case, it's something that probably we've been talking about or hearing about it for a while. Huge big tech companies, maybe they will be broken up into a couple of pieces, remains to be seen. But with regards to the EU, they are really making the case of, well, if our own economies aren't growing as much because we don't really want to support entrepreneurship, and you don't have to take my word for it. How many startups are European that have become huge companies? Not that many, because, for example, in Belgium, an entrepreneur doesn't really get that much help from the government. You don't really have that much incentive to become an entrepreneur, to start your own business in those European countries. So what do? Besides, well, having one of the highest tax rates in the world, what do? Well, they tend to find American companies for billions and billions of dollars. Now, with regards to Alphabet specifically, from investment standpoint, of course, we've talked about this company a lot, especially when it was under $100. Right now, year to date, it's up 40%. In the last 3 months, it's up 30%. It has a market cap of $1.5 trillion. Right now, in the last couple of days, we're going to have a look at the chart. The stock has been flat-ish. But overall, what's very important here, and this is something that I'll keep talking about, share buybacks. The picture will pop up again on the screen. The power of share buybacks. And especially if you look at Google, they've been buying their shares back a lot in the last couple of years. As you can see right here, the shares outstanding have been coming down heavily in the last couple of years. So let's say even though they get hurt by fines, they have to divest some of their business, etc., they can still buy back their shares in mass, especially after the announcements of the additional $70 billion in the repurchasing program. Now, of course, with all that said, I do believe that Alphabet will continue to grow, especially the cloud business. I think YouTube still has a long way to go, and even the advertising business as well. But I would like to see, as I've said before, more cost cuts. The business has to become leaner. It's not normal that even in the last 2 quarters, we see the number of employees in the companies continue to grow when every other big tech company has seen some layoffs because, yes, you've been hiring too much. Now, let's wait and see what happens in the coming quarters. There's still a lot of tailwinds for Alphabet. One of it is, as I said in the past videos, I think the Pixel phone and Pixel devices will be a huge positive for the company. Now, if you're enjoying this type of videos so far, leave it a thumbs up, subscribe if you have not, would really appreciate that. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Now, of course, we cannot not talk about AI when we talk about Alphabet. So here's some more news. Google forced to postpone Bard chatbot's EU launch over privacy concerns. So the Irish Data Protection Commission said Tuesday that the tech giant had so far provided insufficient information about how its generative AI tools protect Europeans' privacy to justify an EU launch. Google recently informed the Data Protection Commission of its intention to launch Bard in the EU this week, which will not happen. And then we have a comment here from a Google spokesperson. We said in May that we wanted to make Bard more widely available, including in the European Union, and that we should do so responsibly after engagement with experts, regulators, and policymakers. As part of that process, we've been talking with privacy regulators to address their questions and hear feedback. Of course, in my opinion, it's not a question of if this will happen, it's just a question of when this will happen. And then last thing here before we jump into the charts, this is some speculation here with regards to Lyft, heavily linked with maybe a takeover, an acquisition, because, well, the company isn't doing that well, especially if you compare it to Uber. So one of the potential acquirers, of course, is Amazon or Alphabet. Alphabet, we know they have Waymo. So buying something like Lyft might make a little bit of sense, but then if you look at the burn rate of Lyft as a business, in my opinion, does not make more sense. And of course, when it comes to regulations, antitrust, I don't think companies like Amazon or Alphabet will be allowed to buy a company like Lyft. And so last thing here is the chart. Right now, in the last couple of weeks, we've been hovering around what was previously a resistance point back in August. Right now, if we can keep the stock at around these prices right here, $120, $125, form a base there until the next earnings report, I think that could be extremely healthy for the stock. And so that will be it for this video. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.